AMD stock is falling. It's now down to less than $100 a share as of this recording. Investors are concerned and they're asking, is the stock still a buy on this big stock price crash? Now, this stock price decline is extremely disappointing for me because I put AMD stock as one of my top 9 stocks to buy here in 2025, and it's underperforming considerably. It's one of the worst performing stocks on that list. But in this video, I'm going to update that recommendation. I'm going to let you know if I still think this stock is one of the best, even after some of the recent news that is not good for AMD, including the tariffs against China, Mexico, and Canada, which are going to increase prices for personal computers that consumers have to pay, most likely. They're certainly going to increase cost, and it's likely that manufacturers are going to pass along those increases to customers. I'll talk about all that. I'll share with you my valuation, my discounted cash flow model for AMD, and I'll look at the forward price to earnings ratio now that the stock has fallen by so much.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So you can see this big price decline here for AMD stock. It was trading at around $224 a share to start 2024. And since that point, it's seemingly gone straight down with brief upturns that didn't last very long. The price now down to $99 a share as of this recording. But the company's business keeps improving, especially in terms of revenue growth. In the most recent quarter, it reported 24% increase in revenue, and the revenue growth rate has continued accelerating for several consecutive quarters. Furthermore, AMD's management team said that they're now even more optimistic about their AI prospects than ever before. Their GPU for the data center has been selling exceptionally well. Management team said that it was their best product launch in their history. That part of the business is thriving. The part of the business that's struggling is the PC business and the gaming business. The gaming business, understandably, the gaming consoles it sells into have gotten long in the tooth now. The Sony PlayStation 5 is now several years old, and it's about time for discussions to begin about the next generation console. And that gaming business is now a smaller part of its business overall. The most disappointing part has been the PC business, where the overall unit sales in that industry have not recovered where they were expected to recover. And these tariffs on China, Canada, and Mexico, already Best Buy, which is one of the largest retailers, one of the largest sellers of personal computers, they already said in their latest quarterly earnings release that the tariffs are going to raise prices for electronics in the back half of this year. So already they're going to pass along higher prices to consumers. Now, when you're dealing with an industry that's already experiencing tepid demand and you add to that higher prices, that's only going to worsen that replacement cycle for personal computers that keeps getting pushed out further and further. But now you're getting AMD business with a greater percentage of its overall business coming from the data center segment optimized for AI. And that business keeps thriving. So at the current price, with the current mix of revenue, you're getting a business more skewed towards the data center segment. And that's good. Investors should prefer that because that's a segment that's forecast to grow for the next decade at least. And so getting a business that operates more so in that industry compared to the PC industry or the gaming industry is a better overall value. AMD's margins have been on an uptrend over the last decade, although they took a big downtrend in 2022, again, as a result of those slowing sales of personal computers and gaming products. AMD's revenue fell and its operating margins fell. But now it's several consecutive quarters where the margin is recovering and continues improving. Management is forecasting this metric to continue rising, and I wouldn't be surprised if it exceeds 20% on a trailing 12-month basis by the end of this year or perhaps in the middle of next year as they continue expanding that data center business, as they continue launching new products, which they are expecting in 2025, newer upgraded GPUs for the data center, and the recent acquisition of the company that operates in building out the data centers should help facilitate more revenue growth at higher profit margins in the near term. So for the similar reason, AMD's return on investor capital is down all the way to 2.8%, and this metric is yet to recover. The company recently deployed a significant amount of capital to make that acquisition. It's also deploying a lot of capital building up ahead of those increases in sales for the GPU business. That being said, it's reasonable to assume that AMD's ROIC, return on investor capital, will rise over these next few years as profitability recovers, as the company's deployments of capital remain muted. Because remember, AMD outsources manufacturing to companies like Taiwan Semiconductor. So it's primarily a semiconductor design company, not a company like Intel or Micron that does both design and manufacturing, which is a more capital intensive business model. It requires more capital in the business. Whenever I look at ROIC, I always compare it with the WACC, weighted average cost of capital. The rule of thumb is that if ROIC is above WACC, then the business is adding shareholder wealth. As of the most recent update, AMD's ROIC of low single digits is not above the WACC of 10%. But investors can be reasonably confident that it will grow to be above the WACC, which is 10.5%. It would be reasonable to assume that AMD's ROIC could recover to the 20% range over these next couple of years. Furthermore, when I conducted this discounted cash flow valuation model, I found AMD's intrinsic value per share to be $246, which compares very well to the current market price of $99. So the company's near term is increasingly under pressure now with the tariffs. Longer term, though, the business is performing better than I expected in the data center AI segment, but not as good as stock market participants would like to see from AMD. AMD is still arguably 2 steps behind NVIDIA in the data center segment. It's gaining market share, to be sure, and it's gaining orders from customers. That's also happening, but it's not expanding quickly enough for investors to be pleased, for the company's ROIC to expand, its operating margin to expand quicker. It's just not happening quickly enough, and investors are getting concerned that if AMD doesn't catch up quickly, NVIDIA is going to run away with this market and leave nobody for second or even third place. That's the big risk that's rising for AMD. So AMD stock looks undervalued when measuring by my discounted cash flow valuation model, which I just shared with you here. And of course, if you want access to this, you can join my channel at the investor tier. You'll get the link to the spreadsheet with dozens and dozens of discounted cash flow valuation models for different companies. It also looks undervalued when I look at AMD stock on a forward price to earnings basis. At just 15.6, this is the lowest you've been able to buy AMD stock according to this metric. So whether I look at it from the forward PE basis or when I look at it from the DCF basis, AMD stock looks considerably undervalued. Now, it's been frustrating. The stock is not performing. It's becoming more of a value trap than I anticipated it would become. But still, evaluating the business, looking at the prospects over the next several years, putting it all together, AMD stock still looks like an excellent investment. So in this video, I'll reiterate my recommendation, reiterate that I think this stock is one of the top 9 stocks to buy now in 2025. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.